Hey, what's up, everybody? This is Chef again, and today I wanted to talk to you guys a little bit about swing trading and just kind of the type of things that I look for in my swing trading when it comes to supply and demand. And I might just go off on a few things here, just so you guys can get an idea of why I swing trade a lot. That's kind of like one of the biggest things that I've been doing ever since I've been trading and actually focused on the type of strategy that I wanted to use as a trader, only because if you guys don't know, I was an actual chef at one point. It's not just my name on Discord. But yeah, I did live that lifestyle as a chef. I've been working in kitchens for a very long time. And so it was hard for me to, come in here and start day trading and scalping. But it was a lot easier and a lot more beneficial for somebody like me who worked, long hours at work. And, I would buy probably around power hour before I went to work, and then I would wake up in the morning to close my positions. Um, so swing trading. I know a lot of people get the misconception, and you get these ideas of hope, and everybody just wants to make tons of money overnight. They want their money to keep on working for them, and they want to get lucky because sometimes these stocks gap up so big or gap down so crazy, and volatility kicks in after hours and pre-market, and then all these news plays, and then what happens, a lot of people get a lot of FOMO, and then they want to start swinging everything like it's the thing to do. But in reality, it's probably one of the most difficult things out there to do and to identify, and also to manage, just because it's a lot of emotion. The emotion comes from the overnight um, thought process of wondering if it's going to gap up or gap down, and that's the biggest issue that a lot of traders have. But also remember that the minute you press that button, the buy button, the sell button, you're already putting yourself at risk. So what's the overnight difference? There really isn't, because you still decided to press that button and buy. If you didn't hit sell and you were in profit, then that's your bad. That's your fault. That's the risk that you decided to take on overnight. And that's why I always say that just because we look at a ticker and it's considered as a swing, doesn't mean you hold on and hope that it'll go green again tomorrow or go red, depending if your inputs. Okay, it's not about that. It's about getting into a trade and letting a runner run. If the winner is gonna go, then let it go. If it's not, then just take profit and trail stop at a 20 to 30%. It's okay. You don't have to swing everything. You don't have to swing for the fences. You don't have to try to get any type of FOMO overnight. Just forget about it, okay? So that's the biggest thing when it comes to the emotions. A lot of people have a very hard time controlling that overnight, and some of these people can't even sleep. And next thing you know, they're stressing out and they're taking it out on their families, which is not something we should be doing as traders. We should be working together as a team and helping one another, lift each other up, motivate each other, and look at these levels and follow these charts. That's all we got to be doing, right? So I definitely go on rants when it comes to stuff like this, because I don't like seeing anybody lose a lot of money and taking this risk and calling lotto plays and swing trades and saying, oh, I swung this overnight, I swung that, and the next thing you know, that same person is asking somebody else, hey, do you think this is still going to be good? Well, you should have thought about that before market closed, right? You should have just taken profit or cut loss, either one. It wouldn't matter, as long as you're not thinking that in your head the next day or overnight. It shouldn't affect you. Anything overnight should not affect you emotionally or anything, okay? It should be something that you understand as a trader. It should be something that you understood the risk was there at all times, all right? So enough of that rant. Hopefully I hit some of you guys in the head over it, and hopefully you guys learn from it. So one of the styles that I do, you guys all know that I am a supply and demand trader, okay? I like to look for consolidation periods. I like to look for stocks that are way at the bottom and then looking for reversals. That's what I like as a trader. If you guys ask me if I would rather trade Disney or Apple right now, my thought process would automatically say Disney because of the value that it's in. Apple is making all-time highs. There's really no reward there. There's a higher risk. For Disney, there's less risk and higher reward, okay? Because this one has structure on the way up. Whenever you want to look for a swing trade, you want to make sure that you have structure in the setup and also a pattern, a catalyst, something that's going to show you a trend change. That's the biggest things that I like to trade, and that's the biggest thing that I've been doing probably for the past year. So with that said, Disney was one of the stocks that was on the watch list already from the weekly watch list. I've been watching Disney since we were right here. Okay, I've been trading Disney as much as I could. I ended up loading up on some leaps here. Ended up selling some, got back in some more. Ended up selling some, and then got back on these dips, and then traded it today again. So Disney's just been one that I've been looking at because of the risk to reward is amazing. I think everything about Disney has a lot of value. The growth that it has, it's amazing. And if you guys watched the previous video too, I kind of explained here that there's a lot of people still loading up at these levels. Well, if you guys are wondering why, well, look, take a look at the bigger picture, guys. It's not always just about this chart, being on a downtrend. It's about finding value in something that makes sense, okay? This economy just reopened, basically, through the whole COVID thing. A lot of restaurants out there are reopening, so that's why you guys pay attention to Shack, Wing, any other restaurant stock. There's going to be a lot of reopening, and what's going to happen now is that the reopening is going to bring a lot of positive news. So those catalysts are going to come into Disney. This amusement theme park is going to be good. A lot of the streaming services for Disney, they're probably going to lose a lot more subscriptions, but either way, it's going to balance out in the long run because the theme park is going to come back and make money again. But either way, the streaming service for Disney is still great. So they did everything in their power to make it through COVID. So everything about the value made sense, right? So loading up at these levels for an investor, it's very, very smart. And that's what I kept saying in all the other videos. All the little breakdowns that I was doing in the past for you guys, posted in several areas, servers and Instagrams. And I don't know if you guys have a MySpace, it's probably on there too. It's more value here, right? So Disney, since it's been downtrending right here, I've been looking at it. And for Apple's just been rolling like super high, so there's no stopping this thing. But again, like if it's already going, then it's gonna go, right? Good thing we caught the bottom on that thing too. But either way, like if you compare it with Disney, I see Disney as more valuable. So with this, when it comes to swing trading, guys, there's a couple things that you want to look for, okay? You want to look for the break of pattern, okay? Anything in the stock market that we trade, when it comes to bull flags, ascending triangles, pennants, symmetricals, whatever pattern you guys have, you want to break out of that pattern, okay? For this thing, on the 4-hour time frame, you see a lot of the downtrend, and what's happening here now, it broke this downtrend here finally, just on this little trend line. And remember, guys, that whenever you guys set a trend line like this, there's a lot more traders out there who have the same trend line. So I can't sit here and tell you guys that I did this, okay? It's not even about that. It's the fact that everybody out there has the same trend line. Every server out there today had Disney on their watch list because of this little trend line. So what happened? It got a lot of volume. It got a lot of attention. There's a good catalyst happening for Disney, and it finally broke this downtrend. Why? So here's the thing. Rule number 1, the break of a zone with volume. Okay, look at it. I want to show you guys some. Here is the price action. Okay, and then all this piece was the investors coming in and just buying the dip. Here, this is where everybody tried to short it, try to smack it down, but the investor, the smart man, was able to actually buy this and take it to the top. And now this guy, whoever got in here, ended up taking some solid profits today, and they're probably big on their percentages and their portfolios. So Here with Disney is what I kept saying over that 178, 179. We're going to start rolling just because of price action here. At one point, this ended up being a little support. There was a supply that got created and it dropped down. So once you come back up and you break out of a supply zone, that gives you more strength for the stock to continue to the top side, right? So the more it goes sideways, the better it is for a stock to break out. And I'm going to show you guys, if you guys watch the weekly watch list, the past couple of ones that I made, a lot of it is a drop-based drop-based rally, and that's the biggest pattern that I like to play. While everybody calls it chop, man, I look at this is straight gold, and I'm going to wait, and I'm going to set my alerts. So you guys see all my Disney alerts way up here. I'm ready for this thing to start continuing to the top side, and definitely we're going to, whenever I get a red candle on Disney, I'm definitely going to buy some more. So that is the number one thing to look for. Whenever you break out of a zone, all right, a strong supply, anything that's been going sideways, and I'm going to show you two examples right now, okay? Anything that's trading sideways like this, all right, you want to capture the top, make sure you have volume. Well, do we have volume? Yes. Okay. Was this a break of a trend? Yes. Was it a break of a trend line? Yes. Was it a break of supply? Yes. Okay. So Disney now has confirmed a nice move to the top. Okay. So now you're going to see a nice staircase pattern happen for Disney. Okay. So whenever you want to trade Disney, now you're on the road for that staircase pattern, and you're going to be able to buy on red candles, right? I think that's a pretty big move for Disney. So I would have recommended to take profit. So whenever you see the 4-hour candle body, the best thing to do is when you are in this trade, no matter how big the move is, you want to be able to use 50% of that first green candle. Okay, so you want to use this. You want to just get that like 50%. And make sure that we are over that 50%. So if you entered here and you had multiple contracts, you scale out, you wait for that thing just to roll out because it's a break of a range, and you allow 50% of it to be your stop loss. Okay. Second 4-hour candle open. Technically, you move your stop loss up. Okay. You want to use 50% of that green candle. Otherwise, if you're still in the money and you're just kind of hanging out with some time, you definitely want to use that candle body top right here. Okay, so you just want to be able to trail it. Either way, either one of these strategies would work for you based on the 4-hour time frame. Okay, so not only that, you also want to look for the top of the previous resistance. Okay, so in this case, we have Disney, basically another range up here, right? And the top is way up here at this 190 level. So Disney has potential to hit 190. I don't think we'll hit 190, 165 yet. But definitely will probably hit the 190. That would be my next level. So whenever you break out of a range, okay, you want to go to the top of the next range, okay? Or you want to just grab it at the bottom, okay? You first got that middle area, and then you got this bottom. So technically, we already blew through the first one, and we're already kind of halfway there. So we still got a little more ways to the 190. Definitely, I'm not saying we can get there this week, but potentially we'll end up being there in the next couple of weeks. If we do get there tomorrow, then by all means, I guess we'll be green again tomorrow. So you want to be able to look for this. All right. Now let me show you something that I've traded before. Let me show you the power of these rallies of these areas that people call chop. Look at this piece right here. Okay. This piece is what everybody calls chop. But if you look at it, right? Oh, this is demand. All of it is building up and building pressure. When it builds pressure, when a stock does that, you want to be able to catch that breakout on the top and make sure that you have a catalyst to break out. Make sure there is a pattern formation below or on top of it. Okay. You want something like that to be able to hold your swing trade. Therefore, you're able to trail it and take it for the longer ride. And then here, let me show you this one again. First of all, your first target would be here, okay? And then you have your second one about right here, and then you have your third one about over there. So you can see, right, here's a little consolidation. This is where we kind of stalled at. And then here, this is where we stalled here for this little piece here. See how like we kind of stalled right here? We kind of went sideways just a little bit. Gave us a little like reset candle right here, try to push up and then just came right back down. That's how you want to see it. So this is a drop base rally right here, okay? All right, so whenever you see this, you also have this, okay? This is what Etsy did. It kind of squeezed in here, which caused this trade to just run. I was able to catch it on this play. So you want to do the same thing when it comes to that 4-hour candle. You want to catch the breakout. So it's a range breakout with this pattern right on top of supply. And you want to use this as a stop loss. You got that 50%. Once it keeps going, then let that thing go. Use that next 4-hour. You want to use the next top of that 4-hour. You want to use the top of the next 4-hour candle. So this way you're able to trail it. And then on the bottom, you want to use these, if they do come down, you want to use them as supports, okay? So there's that one, and let me show you another one, how it happened over here. Same thing here, okay, for UNH. Look at this one. This one had a nice little pattern right here, okay, right at this consolidation area, and then ended up popping to the top. And then again, it created another little pattern, okay? So continuously, UNH just trended all the way to like this 426 from like this 330 level, which is pretty amazing. And then now it's kind of like doing the same thing. Okay, you kind of have this range right here. You see that range right here? We're currently breaking over and we're heading into earnings. Most likely it'll run into earnings and probably hit 430, 440 if it does pretty great even further. So yeah, those are two examples of something that can help you guys understand how a rally-based rally happens, or a drop-based drop, or a drop-based rally. Whenever you break out of that consolidation zone, a zone, it's an area of value. And remember that the stock has to have value in itself. It can't just be some random stock, right? But this is how you will look for the swing, all right? For one, you want to look for the breakout of the zone with volume. What did Disney do? It broke out of the zone with volume. Okay, number two, did it have a pattern? Yes, okay. Did it have a catalyst? Definitely. The economy is basically recovering, and a lot of people are going to, go back into Disney. Had a few friends who went over the weekend. So, again, Disney's still a great company. So yeah, it had a nice trend line. It had a break. It had a volume, everything. So the swing potential was here already for Disney, but this move was pretty aggressive. So we don't know how Disney is going to react in the next couple of days, just because Disney doesn't really have these aggressive moves. It just so happened to have it today, which was amazing. And remember, you don't have to swing everything. Okay, if you are green 100%, if you're green 50, 30%, start scaling out of some contracts. It's okay. So today is Monday. The best contract to get on for a swing trade today would probably be next week, so it'd be like 716. And you always want to try to get the in the monies. If you can do in the monies, do a little slightly out the money. So the 16th, the 23rd would have been ideal today for a Monday. Had it been like Thursday or Friday, I would have been for the 30th or the 6th. You just have to push out your further contracts and try to get the in the monies. The in the monies are what are the ones that are going to move, and also check for open interest and volume. Those contracts, do move just a bit more, and it just shows you the confidence that people have in that stock. And not necessarily to say that, hey, there's a lot of volume on these 225. Like, you guys really think that by July 30 it will be at 225? Then I think that's a little too crazy, but not impossible. So it's always good to just get in the monies. I just wanted to show you guys a little bit of swing trading tips and tricks that you can use. And then also, if you guys go into smaller time frames as well, for something like this, the next day, what you want to do is, if you get this pre-market level, right? Whatever is on the pre-market level, you want to use this as a stop. Okay, so for like instance, let me just show you guys. Oops. All right, so for instance, all right, let's just say you guys enter Disney right here. And then you scaled out right here, and then you just let your runner run, okay? Well, Disney's ATR, it's not $7.30. It's about like $2, maybe $1.50 to $2, max 3. So today it ran pretty heavily. So what you want to do is, when you start trailing this position, and it hits that first target, one of the first targets that we had was about 182, 181. Whatever your pre-market is, okay, use that as a trail stop, okay. If it wants to continue, then for sure let it continue, but use it as a trail stop. Once we break the pre-market high, because that's what a lot of people use, then for sure use that as a trail stop. You want to just keep moving up and consider a staircase pattern, right? This already moved, so you're definitely gonna get a nice red candle, and then you're gonna get that next move. So you want to use that pullback as a trail stop, okay, to stay in the green. Because if you don't trail stop, and what can potentially happen is literally a rejection of wherever we hit, and then just come all the way back down for the retest, and then you're screwed over. So use that pre-market level as a trail stop, okay, guys? So remember, everybody out there uses the pre-market level, so it doesn't take a genius to use those levels, guys. So use them as trail stops, use them as entries if you want, and take profit as well. So keep that in mind. But yeah, guys, hopefully this kind of helps you guys understand a little bit more about swing trading. If it doesn't, please comment down below in the YouTube comments and let us know. Tag us. If you guys got to tag us in conservative collectors, that's fine. Send us some more ideas on what you guys like, and we'll definitely look into some more stuff when it comes to swing trading, guys. All right, so always remember the breakout of a zone. You want some good volume, or you can have a catalyst to cause that breakout. As long as there's a pattern formation, you're good. And yeah, go into the next target and make sure it's something that's consolidated for quite some time, and therefore it creates a trend change. When that trend change happens, you want to be able to buy the dip, okay, not the breakout. On a staircase pattern, you want to buy the dip. You want to buy on red candles, okay? And they say to buy low and sell high, but sometimes a lot of traders buy the breakouts on something that's already trending to the top side, which doesn't make sense. So for instance, here's your breakout of a pattern. Here's your dip buy. Here's your dip buy. Here's your dip buy. Why would you want to buy the breakouts? Okay. You don't want to buy the breakouts. It's supposed to be a staircase pattern. You want to buy the bottom, the bottom, the bottom. Keep continuing to buy the bottom until you get stopped out, because your risk is literally right below. Okay. So I'll leave you guys with that. Hopefully that kind of helps you guys understand a little bit more of the swing trading. And for sure, look out for some more content from us. All right, guys, stay green. Good luck in your journey and continue to grow.